Hello, I'm Troy Bockelmann with the CattleFax Closing Bell. Today's Closing Bell is sponsored by Zoetis. Every little thing is important to ranchers, from daily chores to parasite control. Valbuzen from Zoetis covers 25% more parasites and life stages than Safeguard. Another little thing taken care of. The Choice Cutout closed the week $6.12 firmer, while over the same period Selects advanced by $4.60. Buyers entered the week thinking they would be able to purchase the product lower, but the plant disruptions offerings were reduced, keeping buyers in the marketplace to cover needs. The market will likely face stiff resistance next week, but will be well supported into late May. One reason for the strength in the cutout has been an increased food service demand. As the country continues to reopen, restaurants have had to step into the market to refill the pipeline. The Restaurant Performance Index reached 100 in February, the most recent data. It is the first time the index has been at or above 100 in a year. There is optimism in the restaurant sector as operator expectations for the next 6 months were up 4.8% from a year ago, while the current indicators were down 4.6%, led by weaker customer traffic. On the cattle side of the markets, there was moderate fed cattle cash trade this week from $120 to $121 per hundredweight basis the southern markets. This would be a steady market with last week. The spring highs in the futures contracts are likely in, with spot live cattle futures trading about $2 lower on the week. With a steady cash and lower futures, basis continues to strengthen. On the grain side of the markets, ethanol production continues to run below the pace needed to meet the USDA forecast for corn use. With over half of the market year now complete, ethanol production would have to average around 289 million gallons per week through August to meet the USDA forecast of 4.975 billion bushels of corn used. Yet ethanol stocks are now 25% below a year ago, and potential for higher ethanol demand is likely throughout the summer. CattleFax expects that the USDA estimate for corn needed for ethanol will be met by the market year's end. Since the prospective plantings report, the last day of March, the corn market continues to trend higher, with spot corn futures touching the $6 level this week. This would be a 60-cent increase from the March 30th, the day before the intentions report. The corn market will continue to have an upward bias through June at least, as the market looks to determine the summer weather forecast and if additional acres were planted. The May WASDE will be when the first official USDA supply and demand estimates for the new crop year are released. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.